Hi everyone, and welcome to this presentation with Napatech. My name is Aktier, and with me today I have the CEO, Ray Smets. He will give us a 20 minutes presentation, which will be followed by Q&A afterwards. So with that, I give the word over to you, Ray.
Okay, well, good afternoon, everybody. I'm Ray Smets, CEO of Napatech. It's a real pleasure to be here today. Thank you for joining us. I've been CEO of Napatech for 3.5 years, and we've been on quite a journey. So I'd like to share with you a little bit of the history of our business. I'll keep the business overview rather basic so you understand the technology space that we're in. I'll cover some of the technology areas that we invest in, customers, give you an overview of the market, and just touch on how we've been doing over the last couple of quarters. So with that, next slide, please. Typical safe harbor statement. Next slide. So Napatech is a 20-year-old company based in Copenhagen, Denmark. We have a deep history in building solutions on something called an FPGA, a field programmable gate array, which is a super high performance microprocessor that runs software applications at a very, very low level. So we have a lot of good ability to develop solutions that manage packets that move across networks and servers. We have an excellent expertise. We like to talk about our barriers to entry as being time and resources. We do have patents and patents pendings, of course, but the reality is our real secret to our success is in our software, and the software is not easily developed. Software on an FPGA does take some time, and the area that we're investing in specifically takes a long time to become experts. We've been doing this for a long, long time, building software applications that run on these types of microprocessors, and we've developed a solution that is highly leverageable in today's marketplace in accelerating applications in networking and cybersecurity, and soon to be virtual networks that run on data centers and data centers on servers. I'll explain that in just a little bit in a little greater detail in just a few moments. But we have an unparalleled expertise. We're worldwide known in this particular space, and you'll see some of the players that we compete with and cooperate with in the marketplace are some of the largest players in the industry. We've been building a good, solid financial track record over the last couple of years, and we intend to keep it that way. Hopefully, you've had a chance to look at our history. We're looking at approaching a fairly large market that is growing rapidly in the data center domain, specifically in the area of network interface controllers, or NICs. And we are a software programmable version of one of those, which makes us a lot more interesting in this market space. So I hope you'll agree with that as we go through the detail. Next slide, please. So keeping it simple, we build smart NICs. As you see in the center of your screen here, these little hardware devices are about the size of one or two of your hands together. They're designed to fit within any standard server that ships globally into any data center that is deploying applications today. But the hardware is well designed, and it's made to be very, very high performance and super high quality. But the real secret to our success is the software that runs on this particular smart NIC. On that smart NIC is that FPGA, and on that FPGA is our software release. And our software basically is managed on this design that is shipped to our customers to actually operate, accelerate, and enhance the applications that are running in the data centers. We have a range of prices for these small devices that we ship, anywhere from about $1,500 a unit to about $11,000 per unit. The price depends on the performance level. It depends on the type of release that we have, the type of features that we're delivering. And these are purchased by many different companies around the world to perform very important functions within the data center. So we have a lot of room from a margin perspective, and the margin is derived basically from the value that the software provides that we sell. We do ship the product together. It's a hardware-software combination. As you see, we ship these little hardware devices with software running on them. But more and more, we are designing our solution to be a software-only product, which also operates on other hardware designed by other companies. And you'll see that as we talk about the future of our business just a bit. So we build smart NICs. Next slide, please. The companies that consume them, this is a good slide, gives you an idea of the companies that consume our product. Many different companies around the world buy our products, and we sell in two different ways to the marketplace. And this slide gives you a bit of a balance between the two. We have about 220, 230 customers globally. About 70% of our revenue is derived from companies within the United States. And we have two types of companies. We have two types of sales motions into the marketplace. On the left-hand side of this slide, you see our OEM business. These are companies that take our product, design it into their solution. They buy the product from us, they enhance their solution, and then they ship our product to their end user customers. These OEM customers represent about 70 to 75% of our revenue on a quarterly basis, and we consider this to be the most valuable revenue. It's extremely good revenue for Napatech because these relationships are very long and more predictable in general. So, for example, we have OEM customers like IBM in the cybersecurity domain in what is known as their QRadar product line. We work with Rheinmetall and their military cybersecurity solution set. We work with Mobileum, for example, in their service provider signaling network domain. We work with a number of different companies in terms of network management, network monitoring. We also have a few other customers that are not listed here that don't like to be listed on presentations of this sort. And more recently, we have several of them, Lenovo being one of which is worth noting. Lenovo is a top server company based in Asia, and they have selected Napatech to be the branded solution, a Lenovo branded solution to sell into the new and growing virtualization domain. So an area that we're investing in pretty heavily, and we look to turn that into revenue very soon. These relationships typically just start with a design win. It takes time to get designed into the product line, and then these relationships last anywhere from 3 to 5 and even longer number of years. And we typically see a recurring relationship with these kinds of customers. They buy every quarter, every other quarter, but typically we see an annual relationship with these kinds of customers. On the right-hand side of this slide gives you at least a contrasting perspective of the type of customers that we go to market to. And these are end user customers. These are customers that use our product within their data center to accelerate or enhance a particular application that they've either built themselves or they've acquired as an open source application. We benchmark very, very nicely running applications that are open source, specifically in the cybersecurity and network management domain. And these customers typically buy us for particular projects. So, for example, some of the banking customers like Bank of America, Morgan Stanley, Jump Trading, Citadel, those companies have high-speed trading applications. Some of them are purchased by other companies. Some of them are actually designed in-house. They may buy our product for certain projects at certain times within their data centers to sell their services to their end user customers. Facebook, for example, uses us across all of their internal data centers for an open source cybersecurity solution called Suricata. And they've selected our solution to actually deploy across all their data centers to enhance the performance of that particular solution. Just to give you another minor example, NASA uses us in various ways. One of the projects that we're involved in is to accelerate a communications application for their Artemis Moon project. So we're used in a variety of different ways from an end user perspective. We love those kinds of customers too. They tend to be a little bit more volatile. They're a little bit more lumpy. They're not typically recurring. They may come back for a couple of quarters to purchase our product. But the balance between the two, we think, is a good balance. We expect to go to market over the next couple of years and maintain the type of balance that we have, keep growing the OEM business, and keep going to market through partners and channel partners and VARs to get at the end user marketplace. And I think it's a good balance going forward. Just in the middle, just to touch on it, we also work with key technology partners. Intel and Xilinx are two of the most well-known technology partners globally, building those super high-speed microprocessor chips called the FPGAs. Xilinx and Intel share about 92 or 93% of the FPGA market. And we're also collaborating with an up-and-comer called Achronix. These are technology providers, and in some cases, they're solutions providers or go-to-market partners, depending on how we develop those relationships. But those are some of the top technology companies globally in terms of building the technology that we leverage. Next slide, please. Just to give you an idea, I won't spend too much time on this slide, but every quarter we like to describe the kinds of customers that have purchased our products. The reason why I like this slide is it divides our customer base into different segments and categories. For example, many of our customers are in the networking and security segment, like Live Action, IBM, Cisco, Polystar, Toyo Corporation, Viavi. These are companies that need high-speed performance and help them manage evolving threats within the security domain. We have other customers that are in the telecom and cloud domain. You can see that with Facebook and GoDaddy, but others, of course, like Orange and NTT and British Telecom and Mobileum. These are companies that are focused on service provider applications, and we're seeing a lot of new demand and increasing opportunity in the 5G area, where speeds are of greater importance here, and more user devices have to be managed. In the government and defense arena, we see many different projects emerging from time to time in various ways. Our goal there is to provide mission-critical application support, and typically the need for what is known as zero-packet loss, which is great for cybersecurity. And then in the financial domain, which has been a growing area for our business, high-speed trading applications and just the need for speed and security drives the attention span over there. So it gives you an idea that small Napatech based in Copenhagen does business with some of the largest players globally. And we don't just solve one particular problem. We solve many different problems in many different customer segments and domains in the networking and the cybersecurity space, and soon in the virtualization domain. Next slide, please. I'd like to share with you a little bit about the marketplace to give you an idea of where we sit within this particular market. I'd like to start on the chart on the left-hand side, and each of these bars represents the market size for what the industry analysts call Ethernet adapters, or NICs, a network interface card or a network interface connector. Pretty much everything that connects to a network has a NIC in it. The NIC is nothing new. It's been around for a long, long time. Your smartphone has a NIC in it. Your laptop has a NIC in it. Every server that ships globally has a NIC in it, because no device is valuable unless it's connected to other devices or other networks. So when the NIC market was originally conceived, the concept of a basic NIC, or that little blue bar on the bottom of these bars, was invented. These are super high volume, super low cost, super low margin parts of the market, highly consolidated and dominated by Intel. Intel basically makes the majority of these NICs. That is not a market that we participate in, but it's a valuable and important part of the NIC market. The other two bars or segments of the NIC market, the green and the orange segments, are offshoots of the original NIC market, and they're the ones that are growing more rapidly. I'm going to go ahead and talk about the two, the green and the orange, but we are going to specifically spend a little more time in the orange just to give you a sense for how that market is evolving. The green bar is known as the offload NIC market. This market also has been around for a number of years as more and more companies realize that the way you get more bang for your buck and the way you get more performance out of your server is to offload certain functions from the server CPU, which ships with the server, and you put it onto a NIC, something that you can plug into the server that can run certain functions over and over and over again at very high performance. The offload NIC was invented as a hardware-based solution, run with a solution on there, a processor called an ASIC, which is a hardware-designed piece of software. So it's software designed in hardware. And it performs the same function over and over again to offload certain performance challenges from the server to the NIC. So the offload NIC category has also consolidated. Some of the key leaders in this particular part of the market are players like NVIDIA, Broadcom, and there's a number of others. And its primary differentiator from the next category, which we'll talk about, is it's hardware-based. It's a hardware-based solution. The orange bar is known as the programmable NIC, or what we call in the industry a smart NIC. The real differentiator of the programmable NIC or the smart NIC is it's programmable. It's actually software defined. So it's not a hardware designed offload NIC. It's a software designed offload NIC. So you have the ability to modify it with software very easily. And it's dominated by two different types of microprocessors. One of them is called the FPGA, which is the one that we've focused on, and there's another one called the SoC. You'll see that on the right-hand side is the market share of all of the entire three categories that we see: the basic, the offload, and the programmable Nick category. NVIDIA, Intel, and Broadcom lead the pack in terms of market share. You see a number of major players that we all know. They're all name brand. And you also see Napatech. We are on the top 10 list. We're happy to be there. That's a place that we've entered into the space about 2.5, 3 years ago. And we're very happy to be on the top 10 list and listed with a number of other very large public companies. We know that this market is going to continue to evolve, but the real action is happening right now in the programmable Nick space. And I'm just going to point something out on the left-hand side, and then I'm going to dive in a little bit deeper. If you look at the programmable Nick market, the industry analysts expect that that part of the market will grow most rapidly over the next 5 years and will soon become larger than the other two segments combined. So the programmable Nick market is where all the new action is. It's being driven by two primary reasons. The reasons why it's growing so fast is that you tend to get a higher price for the solution because it's software enabled. So you get the benefit of software in that particular part of the market. And it's increasing numbers of ports being shipped. What's driving this market is a number of different use cases and applications, but we're beginning to see the acceleration of the investment in 5G as a major growth driver there. So that's the market we play in, is the orange part of the market. That's the segment that we are focused on. Next slide, please. If you look at the orange segment of the programmable Nick market, it's dominated by two major players today, Amazon and Microsoft. They are unique in that they've chosen to design their own smart NICs for the purposes of competing in the cloud domain, to be a higher performing cloud domain. They own about 50% of the market between the two of those companies. But the key issue there is that they don't actually design it and sell their product to others. They only consume it for themselves. So they consider themselves self-builds. If you take the remaining portion of the programmable NIC market, you'll see that shared amongst a number of different players: Marvell, Broadcom, Xilinx, Silicom, NVIDIA, Intel. All are shared within that marketplace, all focused on building businesses in the programmable NIC domain. Napatech is the number 3 largest provider in this particular domain. We have, if you look at the total NIC, programmable NIC market share, we have about 4% of that share, and we're actually the 3rd largest vendor in that space. The two different kinds of technology areas that are focused on here is the FPGA and something called a system on chip, or an SoC. I don't want to get too technical here, but the FPGA, which is what we've selected, is the same technology platform that Microsoft Azure has chosen to accelerate their cloud infrastructure. And we're building software and selling our solution to end user customers. And we're going after the growth in this particular orange segment. The growth is going to be dominated by service provider investment, and we hope to activate that through some new investments we've made in virtual networking. So we're very happy to be. The reason why we show this to our investors is to demonstrate that we have room to grow, and we're doing everything we can to develop solutions to get active growth in that area. Next slide, please. So just to, I think we're going to go and yep. So just to give you a sense of where things are going for the future, we believe Napatech is in a very unique position it's never been in before. We have a really solid core business we're taking to market with our current product line. We're delivering solid financial performance. The growth is not as high as we want it to be. We aspire to much higher growth than what we've been delivering in the past, but we're delivering relatively solid results on the current core product that we have. And we're using the benefits of the core solidity, if you will, the benefits of our financial position to invest in a new area we call virtualization, which I'll get into just a little bit. So next slide, please. So the way we're going to activate growth in a company like Napatech is, in addition to having a very strong core business, is to invest in a new technology area called virtual switching, to accelerate virtual switching in the new evolving network architectures. And the way we're going to get access to that market is through partnerships. So we have to build new partnerships to get there. So 2021 and beyond is really dominated by execution in the core, but building partnerships to get access to the new parts of the market that we believe grows faster. That's how we unlock growth. Next slide, please. The types of customers, the types of partnerships that we're developing, we've disclosed so far this year, are those like what I talked about a little bit earlier about Lenovo, a top server company that has selected Napatech to take their product to market. The product that they're taking to market is what is known as OVS acceleration. It's virtual switching acceleration, and it's exactly going to the direction of our future growth opportunities. We are also working with Intel in their new design area called the IPU, which is a new type of SmartNIC, and it is designed. The hardware is designed by Silicon, but it's all specified by Intel. So it's a three-way relationship, and we're working in the same area with network virtualization to accelerate applications in the domain for service providers and cloud providers. And we're also partnering with the new up-and-comers in this space, like Acronix, and so many others that you see on the right-hand side of this slide with our new design wins. The way a company like Napatech grows in the marketplace in terms of revenue is we have to design great products. We have to get them designed in to another company's product area, and then we have to go to market to win the business. And it takes time to get there, but once you get there, you begin to see revenue streams and revenue growth that is very, very useful to a company our size. Next slide, please. I mentioned this briefly, but Intel is one of many in the industry that is designing the next evolutionary step of a SmartNIC. It's called an IPU. The FPGA and the CPU work together on this little hardware device to actually enable a much higher level of performance. The goal here is to offload the entire network stack onto the SmartNIC from the server and basically accelerate 5G performance. So Napatech has already made this investment to get involved in this space, and we're very excited to continue to drive our growth in this area. From an investor point of view, why invest in Napatech? And I'll just conclude with that. This is a company that has a very strong history of developing solutions in the area of FPGA SmartNIC domain. We have a competitive advantage that we're leveraging, and we're trying our best to pivot that core expertise to some new areas for growth in what is a growing and viable market for us. Everything is becoming an application that runs on the server. Everything is going from hardware designs to software designs, and everything is running in a data center. So Napatech sits in a marketplace that is really in the spotlight of what's happening in the data center world today. And we fit within every server that ships to any sort of data center globally, and we're developing software solutions to activate competitive advantages for applications and cybersecurity solutions that run in data centers. So with that, I think we'll keep it short and sweet. And Eric, why don't we go to some Q&A?
Yeah, I want to ask a few questions around the virtualization opportunity that you're talking about, since this could be potentially transformational for Napatech. So could you try to explain what this opportunity entails in terms of the end customer needs, in essence, why the customer needs to adapt your solution, and also, a little bit more about how you're positioned to capture this opportunity?
Sure. It's so I used to work at Cisco. I was an executive at Cisco, and I was also in my prior life a very big customer of Cisco. And I'll use this as a case in point. When telecom or other companies were building networks in the past, they used to go to companies like Cisco and buy switches and routers. And switches and routers were hardware devices that were a combination of hardware and software that were really focused to perform some key functions in terms of switching and routing. Switching and routing is no longer a hardware solution. Now they are software solutions that run on servers. And networks are no longer designed as switches and routers. They're designed as applications running in data centers on servers. And when you take a look across the board of what's happening within networking, is everything is moving to the data center. All of the switching and routing is now done in applications. And now it's a matter of performance because speed and devices are going up dramatically in this domain. So you have to run this at very, very high speed, very high scale. The area that we believe that we have the most presence and opportunity to succeed in is in the area of helping the performance area get improved in the virtual switching part of that architecture. So we've been focused on building applications that run on the FPGA on the SmartNIC that take the switching function from the server and run it on the SmartNIC. And if you can do that, there's a TCO benefit to our end user customers. You don't need to buy more servers, you buy less servers, and you increase the performance of those servers by plugging our smart NICs in them. So you save on how many servers you deploy, how much floor space you need, how much power and energy you need to consume. And basically you get a much higher performance profile out of your new network design. So that is, in a nutshell, what we're trying to achieve here with virtualization, Eric.
And so the next question then is, when can we, start to see revenues from virtualization opportunity, and at what stage are we now, and sort of what is the next milestone for the virtualization opportunity?
Yeah, we've been talking about our product strategy in this area for about 2.5 years. I first called it the 3-prong strategy, where our core 2 product areas were our first 2 prongs, and our risk area, our going big strategy, was our 3rd prong, and that's the network virtualization domain. And we've been designing this solution for a couple of years. And in order to get this product right, you have to work with partners and end users to design it. We can design it in the lab, but the most important part of the solution is actually when you get it into the lab and you actually get it into pilot scenarios. So we designed it based on our best guess as to what was going to be needed in the marketplace, and then we've been working with various partners. And this is where the time scale begins to change, because we can't control how quickly customers will consume our product. What we want to do is be in a position for them to use our product when they're ready to buy. And we've been working with the likes of Lenovo as a key lighthouse partner here. We're working with Lenovo, who is working with several end user customers that they sell their products to in the service provider domain. We're talking about some of the largest service providers in the world, so you can imagine who they are. And we are in active iterative development cycles right now with those end user customers as we continue to develop the software that they require and they begin to test the solution that they need. So it is an iterative process. It can take a couple of years, but we're no longer in the design stage. We're actually in the implementation stage and the testing stage. And we're optimistic that the work that we're doing is actually going to deliver revenue. So we're working towards first revenues here after initial design wins. It can take some time. We would like it to be sooner than later, of course. We're very ambitious here. But if some of these customers bite, you use the word transformational, Eric, the revenues here could be quite large. We're not talking about 10 units or 15 units. We're talking about 10,000 units at a time that could be purchased, high volume opportunities for us in the service provider domain. And we're actively pursuing it. And we're optimistic for success here.
And as you say, it could be a large opportunity. And that's why I guess you're also investing more in R&D now going forward over the next couple of quarters. Could you just briefly, before we finish, just tell us a little bit about what this investment entails?
Yeah, sure. The slide that's actually the backdrop it's a good slide, and I'll just pivot from that. So you can see our growth from Q3 was a 7% year-over-year growth rate, which delivered very solid results. But our aspirations are much higher than that. The opportunity, we believe, unveils itself with this investment area. If we're successful, could create very significant double-digit growth. The kinds of growth that we aspire to is 20 to 30% year-over-year growth. But even some of the opportunities could outstrip that kind of growth rate. We don't want to get too crazy and too optimistic yet, because we have to get to first revenue first. But we believe that the kinds of opportunities that sit within our grasp are the kinds of opportunities that could have a transformational effect on our revenue stream. So we're doing our best as management to deliver a very solid business that you guys can feel confident in terms of how we're delivering and going to market. And we're also taking that solid performance and pivoting it into an area that we believe will deliver significant growth. And we are a player, and we are making progress, and we feel pretty good about where we're at. We are solving significant problems and bringing a real novel solution to the market.
Yeah, I think thank you very much for the presentation, Ray. I think that's all we had time for. And for everyone who listened in, thank you to you as well. Goodbye.
Hey, thank you very much, Eric. Thank you, everybody.
Thank you.